Hello everyone and welcome to today's morning report on Wednesday the 6th of July with me, Richard Perry, market analyst at Handtech Markets. We've got a pretty much a risk-off day again, and this has really been driven by sterling, which has continued lower. Big breakdown yesterday, big move below 130, big figure today, and it's just not really showing too many signs of stopping. It's 31-year lows, and basically the markets are concerned about Brexit and the impact on global growth, and I can show you that through several charts really. This is interesting. Look at this. The Chinese yuan devaluation. Not really getting too much airtime, I think, at the moment, but that is an interesting move that just shows how the Chinese are trying to export, I think, their difficulties or their economic difficulties abroad by devaluing their currency, and it seems to be that is the case at the moment. But look at Treasury yields, lower again. 10-year Treasury yield at below 140, big figure. Now, just zoom back to where that was the last time we were down. That levels out. We've actually broken below that 2012 low now. 38 figure. We're now at 35. Well, does it go? It hasn't ever been that low. Incredible move on 10-year Treasury, and that is a real sign that markets are sort of cautious. And this caution is helping to drive investors into the dollar. We've seen a sharp turnaround of the dollar, big bullish engulfing pattern on the trade-weighted dollar yesterday, and I think that we're going to see further gains in the dollar. That could turn it into a bull flag, which I think it may well do, and further upside. Very much safe haven trading at the moment is in focus. So within that, you're seeing equity markets under pressure. FTSE is an interesting one, though. Of course, the European equity markets. Wall Street closed lower yesterday. Asian markets were lower overnight with the yen strength, and FTSE is it actually up now, because basically the FTSE is such a big portion of the FTSE is overseas revenue, 70% overseas revenue. You translate that through the weaker sterling, you actually get a benefit to the bottom line on the currency exchange. So subsequently FTSE is up, but other markets such as the DAX and the CAC are not up because they're impacted on the negative side from this safe haven move. So really interesting shifts in equity markets, and the outperformance of FTSE continues. In terms of what we've got to look forward to today, well, not a massive amount, but we have got the ISM non-manufacturing at 3 o'clock. Now that is expected to come in at 53.3, so it's slightly higher than last month, but still at lows not seen since 2014, since early 2014. So that wouldn't be an especially strong number, so maybe that would have an impact on the dollar. But then markets will be focusing on the Fed minutes at 7 o'clock tonight. Fed minutes are going to be interesting because they're pretty much, the Brexit decision makes them not obsolete, but certainly changes the whole attitude, I think, of the Fed. And I think markets will be looking at what the Fed is saying in regards to Brexit, and that will be the big takeaway from I think the Fed minutes tonight, because I think the Brexit decision will change monetary policy in the States, and we'll have to wait until the next meeting, which is in a couple of weeks actually. But I think it'll be very interesting. I think it's very interesting the impact that we'll get from this Brexit decision on monetary policy. But certainly on the minutes tonight, nothing too significant perhaps to be coming out. But watch out for comments on the Brexit decision. Now, that takes me to my chart today, which is the Aussie dollar. Now, we've seen the Aussie dollar turning around. We had this strength, this rebound strength of around about 236, I think, from 73 big figure, hitting sort of 75.40, so sort of 230, 240 ticks, but turning around yesterday, and that turnaround yesterday, that candle obviously turned around the sentiment and had an impact on the momentum indicator. Stochastics crossing lower, that's not positive. RSI falling away from 60 again, that's not great. It sort of suggests to me that I think we're going to be sort of putting pressure certainly back on 73.85, which is a long-term pivot actually. Old breakout level became supportive. and I think is again still relevant. So 73.85, but ultimately 73 big figure, because 73 big figure are these two lows from June, and if you break down those lows, I think we're going to obviously test implies a test of 71.45, which is the May low, 30th of May. But arguably completes a top pattern as well. So the downside move that we had initially overnight has been unwound, but I think that's going to be giving you a bit of a selling opportunity, because you look at these momentum indicators on the hourly chart, you'd say certainly the MACD lines have been more negative, although they have crossed higher just now. Sort of might just well, that reflects this near-term bounce that we've had, but I think the bounce is going to find some selling, be used as a selling opportunity. Now you have got a pivot, a near-term pivot around 75 big figure, a couple of old highs, and some support from 4th and the 5th before the breakdown. So 75 big figure is a resistance area now on this hourly chart, but ultimately I think this little is a rebound that's going to give you another selling opportunity. So you'd say, well, the initial resistance comes in around 74.60 area, and that is already held. If I sort of zoom in there, you can see that initial sort of rally high overnight has held today again. So that is your initial resistance, and then 75 big figure coming in there. So some interesting moves on the Aussie today, but I think ultimately this sort of turnaround candle that we had yesterday, sort of retracement move, I think ultimately will put pressure back on the downside. Certainly I think 73.85 could come under further scrutiny, and then below that to 73 figure. So I hope that gives you a bit of information on the Aussie dollar today, and I wish you good luck in your trading, and I'll speak to you later. Thank you.